Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder, and this is BRN Weekly for Saturday, June 27th, 2020. Our top story today, Charlotte reopens, so does the real estate market, and what are some lessons learned? Joining me now to discuss this and more is Sandy Kinbaum. She is a real estate broker with the real estate firm Allen Tate Realtors. Sandy, thanks so much for joining us on the program this morning.
You bet, Jeff. Happy to be here.
Yeah, it's great to talk with you. I see you're wearing Carolina blue, so bringing out the beautiful colors of North Carolina. Let's talk about what you're seeing. Your boots on the ground. America has begun to reopen. Your Charlotte, North Carolina has begun to reopen. How are things looking from a real estate perspective?
Actually, Jeff, right now they're pretty good. We were having the best quarter ever, the first quarter of this year. And then things stopped dead cold in middle to the end of March and April. But with the reopening and people adapting, realtors adapting, consumers adapting, our numbers are back to almost where they normally should be right now.
That's amazing. Let's kind of break it down, because I would imagine during the COVID period before reopening, you had to do virtual showings, or you had to had to get videos and show those to customers. How did that go? Because you were using technology, probably iPhones like the one that I just dropped and the one that I have right here, brought to show clients. How did that go? How was that in making sales and making getting people engaged?
Well, we're really lucky in Charlotte. We have a really robust influx of residents here. Before COVID, we were having 100 people a day move into the Charlotte MSA, our market area here. So It was crazy busy. And then COVID hit and things stopped. Now, we're pretty technologically advanced in our company. We have a lot of resources. But to be honest with you, even though we had them, we didn't always use them, because things were going so quickly that it just was an in-person business and we didn't have the need for that. Suddenly, things changed. Now, in Charlotte, we're 10 miles from South Carolina. So we had the South Carolina rules, which was basically totally open. We had the North Carolina rules, which allowed realtors to do a lot. And then in Mecklenburg County, where Charlotte is, we were totally shut down. But everybody innovates. I sold a house during the shutdown. The seller FaceTimed, actually, it was a Zoomed with myself and the listing broker for 31 minutes. We showed it to my client. They bought the house sight unseen, knowing that they were not allowed to go into the house. And they got to see it after, during that period before closing. So we got up to speed really, really quickly. I had never heard of Zoom before COVID. I think their stock is probably over the moon right now.
Yeah, I think you're right about that. I think a lot of people are using that technology.
So now that we are back open and we still have rules, but we can do a lot. It's interesting. People are either concerned about freedom, safety, or money. And so the freedom lovers don't want to be with you if you're wearing a mask, because it's sort of not their thing. The people that are worried about money will sort of push the rules a little bit because they're worried about not making a living, understandably. Yep. And then the people worry about safety are always in masks. A lot of us are no longer putting people in our cars. They have to follow us. And so those are the three sort of areas that people are concentrating on. Now it's a matter of matching people up appropriately. You don't want a mask safety person working with a freedom person because they don't mesh well. So that's just a new component of brokerage and client selection.
Yeah, I mean, it's all about, it's interesting because yours is a people business, right? I mean, you're helping people find a place that they're going to live with their family, themselves, their partner, whomever. And you have to understand their preferences and what they want. And it's really interesting to see how you've leveraged technology while still not minimizing that connection element. Sandy, when it comes to mortgages, when it comes to getting loans, because a lot of people can't pay out of pocket with cash to buy their home, their dream home, and they need to take a loan from a bank. How has that changed, or what are you seeing in terms of trends? We have mortgage rates at an all-time low, so I would think that would incentivize people to borrow, but who am I to tell anybody what to do?
There has been a small shift, and I'll call it small, to a little more conservative lending underwriter guidelines. Things like credit scores, the more exotic loans are sort of on the shelf for right now. There's gradually beginning to bring them back, but there are loan types that 6 months ago we could get, not the common conventional type, they're still around, but they are a little more restrictive in the more exotics. And as I said, credit scores are up just a little bit, which the pendulum had swung from the earlier recession, and now it's swinging back just a little bit.
So more requirements about proof of income, what your balance sheet looks like. You mentioned credit score. Is there a threshold, like you have to be above a 750 according to FICO?
Oh no, in the sixes is still doable.
Okay.
But maybe where a 620 was okay, now they're requiring a 650. The other thing that's a change is usually they do employment verification right after the mortgage application, and then you might not close for 3 weeks. Now they reassess and make a call for the employment verification right before closing.
Wow. Okay. So
because so many people were being laid off and had lost their jobs.
They want to make sure that they're going to get paid. I mean, and I don't blame them for wanting that. Yeah. I mean, this isn't like a hey, have this house, and if you get around to it, pay us. In terms of the general Charlotte area, you're a longtime resident of Charlotte. What's that been like as things have reopened? And are you returning to some level of normalcy as a family, as a community, as a city, as a people?
I have seen a big change in the last couple of weeks. My office is in Center City, so when I sit there and we have big glass windows right out to the sidewalk, I would say until about 2 weeks ago, you didn't see people on the sidewalk. In the last couple of weeks, it has been a lot busier. Now, having said that, our COVID numbers are racing ahead upwards now. So I don't know if that will pull back a little bit. Our governor is supposed to speak later today and talk about whether or not we're going to phase 3, or whether we're going to stay in phase 2 or 2.5 or whatever they're calling it. So, I think like most places, people are anxious to get out. We're lucky as a family. My husband and I and our daughter, we all stayed employed through this period. We are able to work from home. So we are okay, but I see a lot of changes in the workforce here.
Yeah, absolutely. You're very fortunate. There are so many people out there who lost jobs or who have to go into a store or a manufacturing plant to produce something and therefore have to take some additional precautions. Well, Sandy, we certainly appreciate you coming on the program, appreciate your insight and learning more about what's happening in the Charlotte area. And we look forward to having you back on the program very soon.
Happy to talk to you, Jeff. Have a great day.
Thanks, Sandy. And when we come back, we'll take a look at some of our best segments for the week. So stay tuned right here on BRN Weekly. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
The windows on our homes, they protect us and the ones we love, but they do much more. At Renewal by Andersen, making your home more comfortable is at the center of every window we make. It's why we custom build our windows in America and install them in as little as 1 day. It's why we build our frames with exclusive Fibrex composite material that's 2 times stronger than vinyl. It's why our glass helps keep your home warmer in winter, cooler in summer, and quieter all year long. It's why we stand behind every window with a 20-year limited warranty. Why not help lower your energy costs while giving your home and family the best? Call 1-800-835-6525 to schedule a free in-home consultation. Buy one, get one at 40% off with this special offer. Plus, get special financing with no money down, no monthly payments, and no interest for 1 full year. Renewal by Andersen, the better way to a better window. Call 1-800-835-6525 now.
Welcome back. On Thursday, I spoke with JP Morgan's Dr. David Kelly about market extremes. Let's take a look.
Well, I think the volatilities and the trends are actually, the volatility and the trends are 2 different things. What I think I'm really interested in, and what I get asked a lot about, is there are a lot of people who are fundamental analysts out there, and a fundamental analyst basically tries to figure out what the fair value of an asset is. And they know that for various reasons, shocks and so forth, or psychology, the markets will trend away from that for a while. But the idea is there's some natural gravitational force that'll pull you back to fair value. But if you actually look at the trend in markets in recent years, there are these extreme trends. And we've seen a 40-year decline in long-term interest rates. And if you and it just keeps going and going and going, so that now you can buy a 10-year TIP, a 10-year Treasury inflation-protected security, which guarantees you that if you hold it to maturity, you will earn a return of negative 0.6% in real terms. In other words, the reward for you saving today is that you are guaranteed to consume less with it when you get your money back in 10 years' time. That's an extraordinary thing. You've got Bitcoin, which frankly has an intrinsic value of $0, which is trading at $10,000 and has been, and hit $10,000 over 2 years ago. How can it stay in suspended animation? You've got this enormous gap between value stocks and growth stocks, which just keeps on growing. Even though, again, based on the fundamentals, a lot of the growth stocks look a little expensive and the value stocks look cheap. And finally, another thing that I'm very interested in is U.S. stocks continue to do well on a rising dollar. International stocks lag behind. Again, based on the fundamentals, the gap in valuation should not be that big. So I think this really interesting phenomenon of these trends which just go on and get stretched and stretched beyond what seems reasonable based on the fundamentals. Yeah, I think that there are different implications. I mean, one of them, if you are moving into retirement right now, and what's happened in many cases is you discover that you've got a bigger pile of money than you ever thought you'd have. And that's really good, because you've been the beneficiary of these rising markets for years and years and years. The problem is that you want to live off the income that will be produced by this pile of assets. And when you look at the yields on bonds or the coupon or the dividend yields on stocks, they seem miserably low. And so you've got to adjust your strategy. And I think one of the adjustments is we've got to get over this idea of never selling principal. I think in many cases it is actually more dangerous to stretch out in the yield curve for long duration bonds, or to buy the most risky bonds or stocks just to get high dividend yields or high coupons. It's riskier to do that than to sell a little principal, because after all, you have more money than you thought you would have. Therefore, you can actually throw a little bit of principal into the pot every month or quarter as you draw an income in order to get that income. I think that's, so you have to adjust strategy for a world that is very much out of whack. So I think that's one of the implications. And then of course the other implication, the other question I get asked all the time is, why do these trends go to extremes and what's going to cause them to turn? When you think about what's driving them to extremes, I really think a lot of it has to do with a very long-term trend of actually rising financial assets and a rising flow of money going into financial assets. This has been going on so long that we almost think it's the natural state of affairs. But if you think about it, ever since the early 1980s, first of all, you had the baby boom moving into their peak earning years, and they were putting money into financial assets, and that helped. Then you had a great increase in inequality, and with more money going into the hands of richer Americans, they tend to save more. And then you had things like the 2017 tax bill, which also seemed to benefit richer individuals, and that all of this is pouring money, year after year, a flow of money into financial assets, pushing assets up. If you think that asset prices always go up, you get a little lazy on the fundamentals. You think, well, let's just jump on the fastest moving train here, and that helps momentum. It helps these trends move further. But if you have a reversal, if you have a period of time for a few years or maybe longer in which money is actually coming out of financial assets and assets are losing value, then suddenly you focus a lot on, well, how much is a stock actually worth? Or what is a Bitcoin now that I'm thinking about it? And as you have to ask these fundamental questions, that I think will tend to bring down the high flyers much more than the things that are more based in fundamentals. So I do think eventually fundamentals will win out again. But I think we may need to see that correction with money genuinely falling out of financial assets or coming out of financial assets for a number of years. And there are lots of things that could cause that. Less inequality, the baby boom retiring, higher taxes, all of this could pull money out of financial assets. But when it does that, then I think the fundamentals become more important. And in the meantime, as an investor, when I talk about diversification, make sure diversification includes buying the stuff that is genuinely cheap. Because in those days, if you have a negative market overall, you really want to be invested in those things which will hold up best in that kind of environment.
And on Monday, I sat down with Money Alignment Academy's George Grombacher to discuss the relationship between general spending and retirement savings. Let's take a look.
Well, it certainly was not any groundbreaking or earth-shattering information to me necessarily. I've been well aware that we are spending too much and saving not enough, and that there's a correlation between the fact that the people on the lower end, so the people that are not saving quite as much, are spending more. So that's sort of a causation kind of a thing. It sort of links back to the conversation that we were having a couple of minutes ago about helping people to become financially successful, help them to generate retirement income. And the fundamental thing is here, I can't do financial planning for people if there's no assets to do financial planning for. And I think it's great that there's organizations and these companies are working to put new things in place, new mechanisms in place to help people save money. But unless you can get people to actually change behaviors and stop spending as much and start saving more, well, then you could have the fanciest financial instrument in the world, and it's just not going to matter. Yeah, so I think this is really one of the fundamental problems that I think that we're facing as a country. What was it 6 months ago before all this happened? 60% of Americans had $400, and that was it, and no real savings behind that. And their biggest concerns were bills that would come up and some kind of an event in the stock market and an event in the economy. And now we've lived through that. So of all the things that we need to be talking about and thinking about, I think it's this. And just in terms of language and terms, having enough discretionary income to be able to save, I appreciate that. But at the same time, it's like, well, savings shouldn't be considered a discretionary thing.
Sure.
So I think it really is a conversation about lifestyle. And what you were talking about a minute ago is that we saw that savings have increased over the past 3, 4, 5 months or whatever. And I think that's just getting down to essentialism. It's getting down to what's really most important to us. What are our priorities? And that's making sure that our families are taken care of and that we're able to provide for them. Okay, well, we've proven that we're able to pare things back and to do certain things. In that report, it talked about that the three areas that people are overspending on is housing, transportation, and then eating out. Well, I mean, you just fundamentally don't need to overspend in those areas. And there's been a lot of talk over the past however long it's been about, avocado toast isn't the problem, lattes aren't the problem. Well, it's certainly not helping. And the BMW that I'm driving when I'm 25 or 30 years old, certainly not helping. And the overpriced apartment that I'm living in is also not helping. And, you can look at that from perhaps the middle class, the upper middle class, but I can almost guarantee that if you really had a serious conversation with any household across the country, you'd be able to find opportunities where they're overspending in those key areas as well. And again, that's probably not a super popular conversation, but I'm interested in talking about solutions and not just talking about and philosophizing on why this might be happening. I want to talk about what you can actually do to put yourself and your family in a position where you are able to be saving money, because that's where we need to get. Yeah, I think you hit the nail on the head. This is a time to be increasing our resilience. It's our time to be increasing our resilience from a financial standpoint, and it's our time to be increasing resilience from a physical and mental health standpoint, because I don't know what's going to be next. Maybe COVID-19 is going to be next for the next 10 years. I have no idea. But if it's not this, then it's going to be something else. Yeah. And so we need to get stronger. We need to get stronger financially. That means making tough choices from a lifestyle standpoint. You need to get stronger physically. You need to exercise. You need to put good food in your body. And you need to make sure that your mental health is strong as well. And if those aren't the most fundamental things in the world, well, let's just stick to the basics.
And that wraps up this episode of BRN Weekly. But we're not done for the week, because tomorrow I'll be joined by members of the media, academia, and financial services to analyze all the news in retirement markets, technology, personal finance, and more. It's going to be another great show. I know everyone's excited to talk about all the key issues for the week. So until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Services has officially authorized new benefits that Medicare Advantage plans may include. To get the benefits you deserve, you can call the Medicare Coverage Helpline.
Hi, I'm Joe Namath. If you're on Medicare, this is important information. I called the Medicare Coverage Helpline and they instantly looked up my coverage. In this one simple call, they offered to enroll me in a plan that includes rides to medical appointments, private home aides, doctors and nurses' visits by telephone, and even home-delivered meals. The plan also includes dental, vision, hearing, and prescription drug coverage, all at no additional cost.
Don't delay. Call to see if the new benefits are available in your area.
Call the number on your screen now. It's free.
Call 1-800-757-1451. That's 1-800-757-1451.